In this video, my goal is to demonstrate a couple of different answers to questions that relate to personal finance using WiserRobo. In this first example, we'll start on the account list. Notice I've got a sample checking account shown here. I'm going to switch to the Q&A tab where I've got a few questions already pinned for quick access. And I'm going to pick this one, which is going to tell us about our monthly spending patterns. And I'm going to choose this option to look at it as an infograph, which for our purposes here means we're nectaring the answer down to one simple chart. So notice that off the bat the answer is excluding what it considers to be unusual spending, since let's face it, sometimes weird things happen for various reasons, and letting the system include that noise can build a misleading picture. Keep that in mind as a theme for WiserRobo. We know data, and it's our mission to help you make sense of yours. Now the chart is updating to show what days of the month have the heaviest spend, and by the time it finishes, it's pretty clear that the latter part of our month is heavy for spending, to the tune of more than half in the last week or so of each month. Let's go back to the answer list and find the same question, but with a different view type. Let's use the chart type. Notice here we're seeing the same underlying data, but in a chart by day. And it looks to be confirmation of the infograph. Spending is heaviest on average later in the month. And we've got an option here to switch over and look at a comparison of recurring versus total spending, which for one thing shows the concentration of spending is mainly due to recurring expenses. Okay, let's use the same answer one more time, but this time we'll use the commentary option. So this format is more of a personal advisor discussing facts about your spending with you. For example, we're being told here that our greatest spending is between the 23rd and the 30th of the month, which thankfully agrees with the chart we just saw. But it's giving us more details, such as specific average spend amounts by day, and here it's calling us out on the fact that for the current month, we're spending way more than normal, and we might have a good reason for that, but it's worth noting. And here it's telling us how much we might expect to spend over the remainder of the current month. And here we're seeing specific payees. And it's adding some logic to help us here. It's excluding recurring expenses since we might not have as much choice on that type of spending. And it's giving us a top 5 payees averaged by total spending, so these might be decent candidates to find cheaper alternatives since we're not so locked into them. Or it might confirm that we're doing well. And in fact, we see specific payees being called out as having some higher than usual spending by comparing very recent history with less recent history. And I'm not going to spend more time on this answer here, but certainly could, and that's what our blog is for, to dive deeper. An important takeaway is we're able to deliver what feels like a real assistant, able to point out facts about your situation that you can benefit from. So let's shift gears and look at another question, namely the question of how you can build a simple budget that actually works for you. And this is what I've dubbed the really simple budget, or RSB for short, because it's very low effort to get it up and running, and concepts are fairly simple, and it requires minimal care and feeding on an ongoing basis. And I'm going to set up a new budget here as I talk. We've got a different video that covers more of the setup details. One really nice feature that I do want to talk about in more detail is the concept of virtual accounts, which can be used for saving or other specific purposes. So as one example, if we pay taxes by installments, we can set up a virtual bucket for that. And then we need two things to happen. First, we need our income to exceed our expenses in a way that lets us have those funds be available. And what we actually do with those funds, be it transferring them to a money market account or whatever, is secondary to having the funds be real, which only happens if our income exceeds our expenses. And WiserRobo treats transfers as non-impactful on net worth, although there can be exceptions which I'll discuss another time, in particular related to investment income. And second, we need to be able to equate transactions as being either credits or debits against these virtual accounts. And that's a key difference with a lot of other products, but in our example of estimated taxes, when we make a payment to the IRS, that's really a debit on our virtual account. We might have accumulated a savings of say $5,000 over a few months, but a $5,000 check might drop it down to zero, and then we continue adding new funds in the following months, and so on. Ideally, that spending should be reflected into the proper bucket, so we need a way to take tags related to the virtual account and use those tags on actual transactions that show up in our accounts. As it turns out, we can use the virtual account name as our tag. So here we're a good part of the way through setting up a new RSB budget, and I'm at the point where I'm setting up a virtual account for our hypothetical scenario of paying estimated taxes. I'm going to say that I'm using a percentage of income for this, which if I knew my average tax rate could be say 12% like I'm doing here. And notice in doing so, it knows my estimated income and is offering a monthly amount as well. But the important point is percentages override monthly amounts. So if we suddenly start making more income, we're not left in the lurch at the end of the year with a big tax bill we can't pay. Or if I make less, I'm not oversaving. I'm also going to set up a second virtual account to hold savings we'll be doing to make a down payment on a house. I'm going to use a fixed monthly amount of $250 and a name of for house for this one. So remember that for later. I'm also going to allocate some of my available funds to this bucket, say $2,000. How much we have available is shown here, and it's based on the budget start date. And in this budget, I backdated it to start in May, so we can look at performance as if we've been using it for a while. And keep that date in mind as well for later. And before I finish with virtual accounts, notice that the system is pointing something out. We've set up an amount of savings that exceeds what we're technically able to do based on the amounts we previously set for recurring and non-recurring expenses. And clearly something has to give, and the behavior here is to reduce your non-recurring expenses proportionally so we can preserve what we suspect are the two immovable pieces, non-recurring expenses, things like rent, and your savings load, which, using the example of estimated taxes, is pretty essential that you stick to it. So if I accept this in the review stage, here we can see how I'm being told to reduce my spending on restaurants, for example, compared to what I had initially set on the non-recurring expenses page, by a little bit, but at least all of these items add up to a valid figure. And that's a practical, actionable outcome of this process that's hopefully realistic. If it's not, I can revise my budget details, but for now, I'm going to save this. And now we're back on the first page for the RSB, and we can pick it to track against it. Now I can see how I'm performing in the current month. I can see income, recurring expenses, and non-recurring expenses. I can also see the virtual accounts that I've set up. Notice I've got the one for estimated taxes, and the current balance is showing here. And it's reflecting the fact that I set my initial balance to $2,000 on both accounts on setup, and the expectation is 12% of my income is going into that bucket. And if we do the math for May and June, 12% of my income has been correctly added to that bucket. Keep this picture in mind, in particular our current virtual account balance for house savings. Now, let's suppose I get an unexpected $5,000 check, maybe for some freelance work. I'm going to add a new transaction for this myself, although if we've linked our account directly to our financial institution, this step wouldn't be needed. It'd be done for us automatically. But for my purposes here, it's a manual test account, so I'm going to type it in by going to the Transactions tab. And I'm going to enter some of the particulars here. Now let's say this is something that I want to use specifically for my house down payment savings. It's easy to make that association. I'll go and tag this transaction with for house as a tag, and recall that's what the virtual account name is. And while I'm at it, I'm going to tag it as income here as well at the same time. And so let's go back and look at our budget after adding this transaction. And sure enough, 12% of the $5,000 check I just added has been added to the estimated taxes virtual account, which is good. That's $600 that could be lost in the shuffle otherwise with a lot of other tools. And for the house savings bucket, notice we're reflecting a bump in the balance due to our deposit, or what's left of the deposit after the estimated tax bucket has been considered. And something else that WiserRobo can do that's rather unique is we have a way to split our deposit into multiple virtual accounts if we wanted to. And we could do that by, instead of tagging the entire deposit with the virtual account name, we could leave it as a plain income transaction and then add separate transactions as virtual account credits or debits. So for example, if I go back to the Transactions tab and create a new transaction, notice that among the options we have are virtual account credits and debits. So I could add one here that increases my bucket for the house savings by, say, $2,000. And I won't save that, but this is where we can go to do that type of thing. And again, with tagging, when I pay those estimated taxes by a check or ACH or whatever, that debit transaction would show up in my account, ideally by automatic synchronization, and then by tagging it, my virtual account balance would go down by the appropriate amount. And what this is doing is giving us powerful tools to manage these virtual accounts and match reality much more correctly than what most other tools provide. And that's very good, since as you drift away from reality in personal finance tools, you're less likely to trust them and use them as intended. At least that's my experience. And the effort to manage things like the RSP isn't crazy. We've done everything within the mobile app here on the transactions and Q&A tabs. We don't have to get this detailed either. We could have simply allowed that $5,000 check to flow in as income and handle the excess as buffer that we allocate to these goals. But I'd propose that it's not the best way to go to do it that way. It's easy to spend away excess amounts that are just sitting in your accounts, and so it's good to have purpose in mind for those type of funds. And this all integrates nicely with the reporting that's available in the RSP. For example, here I'm going to launch a nifty report that tells us a lot about how we're performing over the last couple of months, May and June in this case. For example, we can see that May was a bad month for saving. For whatever reason, our non-recurring expenses were much higher than usual, leading to a portion of funds that we were unable to save, shown as purple here. And we got in the hole by this amount, shown in brown. And in June, things got much better. We had higher income than expected, and that allowed us to save not only what we needed to have saved for June, but also compensate for what we couldn't save in May. So the brown portion for June showed us being slightly ahead on overall income versus expenses, but the pink portion shows an overhang from May is still there, just reduced by a bit. Another thing to note is the savings percentage shown over here. And notice for May it's at negative 100%. And basically that's showing us the fact that in May we should have saved a certain amount, and we actually are in the hole at that point. And so by the time the end of June has rolled around, we've actually saved the full amount for May and June, so we're back to 100% of where we should be, and so the savings goal there is at 100% for June. And one more thing I'll look at here, you can see under non-recurring expenses we've got this really huge spike in the current month, and we might have a good explanation for that. So good that we're effectively dealing with it as an exception, and having it participate in our budget here is misleading. And if we're willing to manage this by excluding it from the budget process, we can do that by going to our transactions. And notice that we've got this $30,000 transaction that looks like it might be a loan repayment transaction, and maybe we cashed out some investments and we're trying to pay down a loan or something like that. In this case, let's say I'm satisfied to track it outside of what WiserRobo is doing, since it's kind of a transfer really, and we're not currently tracking loan account transactions within WiserRobo today. So I'm going to pick an existing tag called ignore from reporting here and add it to the transaction. And this is a special system tag. And we'll save it now. And notice we have a little red flag by it in the transaction list now. Now if we go back to the budget and see how it looks now for non-recurring expenses, you can see that we've got a much lower level of non-recurring expenses. So we had the intended effect by marking that as ignoring for reporting. So I'm going to wrap up this video with the standard call to action. Come and sign up for notifications when we publish new videos like this one, and stay tuned for more coming up soon. Enjoy and take care.